We now move to our final panel session of the conference, and given the discussions that we've had so far, I think it's particularly apt that we look at how does the financial and related professional services industry better support global innovation in the wider economy. And I always prefer wider economy rather than real economy. It suggests we're all somehow ChatGPT bots, which may be a conference in years to come, but we'll see. Please do welcome to the stage the chair of that panel. Slowly welcome to the stage the chair of that panel, Louise Brett, the vice chair of Deloitte and the chair of the TheCityUK Tech and Innovation Group.
Thank you. Thank you. I am delighted to be here slowly, and one of my panelists is also using a crutch today as well. So it's a theme, but delighted to be here to speak to you all on this really important topic. It's not only what do we do inside the UK, it's how can we influence the rest of the world for good. This Monday, we came out with our quarterly CFO survey at Deloitte, which hopefully many of you will read. It's a touch point on how CFOs in the UK are thinking. And the optimism was absolutely notable. That significant increase in a positive outlook, the fact that the uncertainty that we ask a question and have asked the same question for the last 12 years about what do you feel about uncertainty, and we had the best response as people are feeling less uncertain. So against a backdrop such as that, I have got 4 fabulous panelists to talk about, well, what can we do? How can we knit together and really deliver something that will embrace the technology, the innovation that can change the UK and the rest of the world? So I'd like to ask to come up in turn, and I'll read their bios out as they come. So firstly, Ed. Ed, where are you? Ed, thank you. Ed Bowles. Global Head of FinTech at Meta. And it's probably worth saying FinTech, for me, and I think for all of us, is FinTech, RegTech, AsTech, InsurTech. It's the whole industry. It's not just some people think it's banking tech. It's not. Ed is Global Director of Public Policy for Meta Financial Technologies. Before joining what was then Facebook, in September 2019, Ed was Managing Director for the Group Public and Regulatory Affairs at Standard Chartered Bank, where he worked from 2007. During his time at SCB, Ed was also a member of the European Commission's Advisory Group on TTIP, a board member of Hacked Off, and on various committees of UK Finance, AFME, the TheCityUK, and City of London Corporation. Prior to that, he spent 5 years in Whitehall, variously as Head of Human Rights, Private Secretary to 2 ministers, and the Permanent Secretary of the Ministry of Justice, having previously practiced as a barrister. So I think an incredibly rich pool to pull upon. Benjamin, are you around? I think, or Ben actually. Benjamin Kumpf, Head of Innovation Development, OECD Development Corporation Directorate. Welcome, Ben. Ben has been Head of Innovation at the OECD since December 2020, prior to which he was Head of Innovation at the Department for International Development. Ben's previous roles include work with UN volunteers, the German Agency for International Cooperation, the International Agricultural Research Institute for the Semi-Arid Tropics, and others in India, Jordan, Nepal, and Rwanda. A very global brief. Ben teaches at the School of International and Public Affairs at Columbia University and at IE University, Madrid. Thanks, Ben. Lou Smith, Chair of the Board at Innovate Finance, the FinTech trade body for the UK, and Head of Digital Trading at WTW, or Willis Towers Watson. Yes. Louise has been chair at the Board of Innovate Finance since July 21 and head of digital trading at WTW since December 21. As well as this, she's the chair of the UK Board of Directors at Stripe, who are celebrating 10 years, I heard earlier. Louise was formerly an HMT FinTech envoy for Scotland, advocating the industry across Scotland and the regional networks. She just spent 2 years as Chief Digital Officer at Lloyd's of London and has also spent time working at RBS and Barclays. You can see the richness of the panel we are building, to be complemented, finally, by Claire Suddens-Spiers. Claire. As Claire makes her way slowly to the stage, Claire is a partner as Global Head of Equity Advisory at Rothschilds. Claire's been head of equity advisory since January 2019 and has worked at the company for 26 years. She began her career as managing director in 1996, a role she still holds, and she has also been head of Asian equity advisory, later adding head of Asia to this title. Thank you, Claire, and thank you, panel. I'm delighted to have the opportunity to ask you some searching questions. So here we go. Right. Ed, I'm going to start with you. What do innovations like Web3, the metaverse, and AI mean for the financial and related professional services industry and its role in the wider economy? In answering that, what opportunities for social impact do you think these technologies open up for our industry?
Well, thank you for that question, Louise. There's quite a lot in it, and I hope I won't bore people by attempting to answer it. I think it's probably best to start with trying to differentiate between what is going on in the hype side of that sort of question and what's actually happening in reality. And the truth is there are quite a lot of firms in this room who will probably think it's not going to be really particularly relevant for my business. And I would say you couldn't be more wrong. On the 15th of February, only 2 months ago, in Colombia, they held their first court hearing in the metaverse with advocates, defendants in a criminal proceeding appearing in avatar form for the first time. There are law firms in America that now have their own offices in the metaverse. Legal proceedings can now be served, as they have been in the UK High Court and in courts in states in America, using NFT technology. And these are just sort of the beginnings of examples of things that I think will suddenly start to become much more widely applied, not only in legal services, but in accounting, in tax, in trade transactions, in innovation, design, and indeed manufacturing. And a lot of that comes out of what was loosely described as the Web3 community, which is sort of an ecosystem of developers who are leveraging cryptography, using different blockchains, some of which are programmable, some of which are not, to create new applications, that some of which will succeed and some of which will fail. And we're in that sort of phase of experimentation where you will see companies investing significantly in them and maybe failing, and others suddenly taking off. Linked to that ecosystem are, what was loosely called the metaverse, which is basically a series of virtual worlds that will at some point have the ability to connect with one another. At the moment, they don't. But we have a world, BMW has a world, a number of companies are constructing worlds, as well as entertainment organizations, galleries, concert venues, and so on. And at the moment, these are not connected, but they will become connectable through the Web3 world of blockchain development, as well as significant systems of computational power using GPUs rather than CPUs, which takes us into AI, which I'll come on to in a moment, because you need really quite high-powered computing capability to deliver a meaningful, real-time, scalable, large volume operation of transactions and experiences if it's going to become a meaningfully investable experience that companies will want to pivot their entire organizational revenue-driving model to. And to give you one example of a company that's already doing this for design purposes, BMW, I don't know if anybody in the room is here from BMW, they now design their cars and manufacturing processes entirely in their own metaverse. That metaverse was not built by them, it was built for them by NVIDIA, and you can go in if you are invited in, and you can experience sitting in a room with a bunch of engineers in virtual reality. I personally hold all my team meetings in VR. Weekly team meetings. I've got a globally distributed team, people in Singapore, South Africa, Brasilia, right across various states in the US. It's not practical, obviously, to meet every week or indeed every month, or very often not every quarter. It is very practical to put on a headset and meet for 45 minutes in VR, legless at the moment, legs are coming, and have a really much more meaningful conversation and experience of sitting beside people than you would on a 2D environment. And I think one of the things that we're seeing here is companies like Microsoft and Accenture looking at scalable enterprise applications that will transform the way in which companies at the moment who largely struggling, particularly large-scale distributed employers, with a resistant workforce who don't want to return permanently to the office full time. And so how are you going to equip your employees to become productive, to be interested in remaining with you if you're not investing more in them in the new way in which they want to work, which is either hybrid and or permanently remote. Driving much more investment in the way in which they're experiencing their work environment. And so, Microsoft has developed a suite of applications which we're integrating into the way we operate our workroom experience in the metaverse, which is something that will become licensable in due course. And other companies are doing the same. Accenture bought 60,000 of our headsets in order to equip their new hires to start to work more remotely globally in a distributed way. And so I think what you're seeing is the beginnings of applications that are starting to achieve investment scale, stickability, if I can put it that way. Others that will fall away is by virtue of a process of trial and error. I think the question for this room is, larger employers who've got bigger R&D budgets, if you've got an R&D budget, if you've got meaningful CapEx, how are you planning to stay relevant in a world that's going to become increasingly digitized, whether it's for trade, for commerce, for virtual meetings, for courtroom experiences, if you're not investing in that now or looking at it now? AI is slightly off to the side. There's obviously Twitter, you've got experts who were last week experts on the Russia crisis, this week they're experts on ChatGPT-4. Now, the truth is those powers that are evident in large language models will have meaningful impact on all of our lives. There is no question about that. We have 3 sets of applications of large language models already in operation, 2 of which are at significant scale. One of which is dealing with content moderation, the second of which is dealing with synthetic first-party signal generation following the loss of certain third-party signals. And the third of which is now in the hands of academics. Because what we don't want to do, and you may think this is rather unusual for my company, is release something into the market without actually understanding the uses to which it could be put, particularly the nefarious uses to which it could be put, and the adverse consequences that may flow from that. So we've only released our large language models to academics who we've previously vetted because we want them to really stress test what can be done with AI in the form of large language models, particularly when you start using video and still graphics as well as word. Obviously, there are a bunch of models out there, and it's interesting. Some of you, no doubt, will be subscribers to ChatGPT-4 or to Bing. But I think we're only seeing the tip of the iceberg in the way in which that's going to start to transform many worlds. And my company is obviously looking at it very heavily in terms of the way in which computing and engineers can code more efficiently. But you're going to see it for lawyers in terms of documentation. You're going to see it for writers, students. The question is, people who are operating those systems need to be as good as the systems in order to verify that the shortcut that those systems provide in terms of producing a new string of code for application doesn't contain errors. If you're not a particularly good engineer, it's not much of a shortcut if you're then churning out stuff that is full of faults. So I think we're beginning to see how things will evolve. We are very far from scalable industrial scale use cases, but I think people should not underestimate the way in which this is going to transform, particularly the service sector set of industries that are in this room.
Ed, thank you. As you say, it's the beginning of the next wave, which is really exciting. And we know that in company reports and in earnings calls, the use of metaverse and AI is sort of moving around. There's less talk of metaverse, more of AI, but it sounds like it's all bubbling, and we'll just hear more of it. Thank you. Louise, often organisations won't necessarily directly invest in these innovative technologies themselves. Sure. They'll look to partner. So as traditional operators increasingly build partnerships with innovative companies, what have we learned from the efforts so far to collaborate and co-design? What, in your opinion, has worked well? And how do you address that power imbalance between the big heritage organisation and maybe the smaller innovative startup?
Yeah, so thank you for inviting me. Listen, I can imagine with you guys sitting there, this is all really hard, eh? RegTech, MedTech, FinTech, AI, web, lots of high growths, lots of not high growths, people falling off right at the moment. It's all really hard. I've sat around bank boards. I had the privilege to work on lots of business models that you probably all now use every day to manage your financial services. So I delivered one of the first UK internet banks and also mobile. And now we have pretty much every single person daily interacting in some way with a FinTech. and you probably don't even know. And that's when you sit around these boards and you're going, oh my God, what do I do with all of this? I work in insurance, and that's even more interesting, because you kind of think, I don't have to worry about this stuff yet because we're all right, revenues are okay, commercial lines are doing really well, why should I bother? And there's a bunch of fintechs, insurtechs and disruptors who are like a tsunami of ants looking to take your margins. And as I said, I sat around bank boards when everybody said with the rise of Starling and Monzo, and I know Louise really well actually, and we've talked about this so many times, and they said they're not going to get licenses, they're not going to get customers, and they're not going to take any revenue, and they did. Let me leave you with one thing. Starling Bank was founded in 2014. It took till 2018 for Starling to become the UK's best British bank, as voted for by customers. And she started it not because she wanted to disrupt retail banking, it's because people didn't give Anne Bowden a chance to be a CEO, a female leader where she could see people like her every single day, in the talent you recruit and the people that lead your organisations. And she changed the face of retail banking. Does anybody know how many customers Monzo has today, started in 2015? 36 million. It doesn't matter whether you agree with their business models, whether you like their customer service, or whether you think they're good. 36 million people do. Just lost my mic. It's this shirt, I think it's a bit loud. Decided to jump off it. And actually, the real important thing is, as Ed said, what are you doing today to learn these things? And you get tons of people coming to you with all these acronyms. And as a leader in your business, for the first time, you're having to go, I don't understand, I don't know. And that's hard, eh? It's vulnerable to kind of go, I don't really understand it. So in RBS, I had the privilege to work with Ross McEwen. I led one of his 7 streams called Future Bank Strategy, which was actually digital transformation. We didn't call it anything then. We didn't actually know we were that cool. And we started to think about how do we take RBS, which was the biggest banking failure in history, because we'd let down customers, and start to lead the organisation out. And we knew we could only do that by partnering, by collaborating, and by learning. Because how many people are in your organisation versus how many people are in the world? So why do you think you have the best ideas? And don't think that the fintechs are just people who sit in their bedrooms or their garages with laptops. They're middle-aged, disgruntled people who understand regulation. And they're all coming after you. So it's UK FinTech Week, which I hope many of you know. And we lead UK FinTech Week as part of Innovate Finance. And as Louise says, it's the 10-year anniversary of Stripe, 2 roles I feel incredibly privileged to lead. And when we started in RBS, we thought, well, how do we get customers to care about us again, particularly in Scotland? Nobody knew we had the NatWest brand. And we had exactly the same digital propositions. One of them blue, one of them purple. The purple one won everything. I was collecting awards for the NatWest one and being publicly slammed for the blue one, and they were exactly the same. So we started to think about how could we change that. So we partnered with fintechs, and we got it horribly wrong. Procurement process is really difficult. Inviting regulators in to understand what does that look like. We announced this week the permanent sandbox with the FCA. What that means is, if you've got ideas about how you want to start to think about innovating in your business, go and chat to the regulators. They're there to talk to. They will help you. Invite them in. They will help shape it with you. And so will a bunch of other people who are sitting on the end of these things to help you think about your business model. But if you're not interested, please don't give everybody a long, slow maybe, because it's really painful when you're a high growth or you're a startup. Just say yes or no, because they're really small and they have limited resources. And that's one of the things we see is who are the decision makers, get to those people quickly, and it's okay to say no. We then started to think about who do we work with. So I worked with it's well known now in the public domain. We started to partner with Free Agent, which was SME cash flow. We then invested, and then we brought them into the RBS brand. And this very thing of, cultural, we got this cool high growth, all walking around in sneakers, not quite so much today, all sort of like thinking about how do we actually take the best of this culture and the best of RBS, a 300-year-old brand, and leverage them. And we didn't know what to do because we were so scared about those cultures bleeding into each other. We kept them so separate, the power of the two we never leveraged. So think about deliberately how you actually leverage both brands, because the high growth and the fintechs can learn a ton from you, and they want to learn from you. They've worked in big organisations. But I genuinely believe right now, from a UK perspective, whilst we have seen 12 billion go into the fintech community and the tech sector, and we are still second in the world, so we could be sitting there going, well, okay, still getting the investment. The lines aren't really that in trouble yet, but they will be. You only have to look at some of the fintechs that are UK companies. They're now American companies because they can't get the funding here in the UK. Or they're looking to Amsterdam because they can't get the funding in the UK. If that happens, economically, that is a real problem for us from a UK perspective. So starting to look at how you can collaborate, partner, learn from each other is absolutely critical. How you support underrepresented entrepreneurs who have brilliant ideas. So let me give you another stat. Same idea as a company. One's a white, middle-aged male who's Harvard educated, a female entrepreneur with exactly the same business model, exactly the same level of maturity in terms of thinking and funding. The funding goes to the white male. And we have a real problem. That's gone backwards in the last year, actually in the last 3. But these companies will disrupt you. They are looking, they are there all around the edges like payments was when PayPal emerged. So my ask of you, or my call to action of you, is get curious, get involved. As I said, I'm chair of Innovate Finance. We have so many members, all the heritage organisations as well as the high growths. Reach out, and if you want to understand what's happening, we'd be happy to help you. If you want to start thinking or shaping ideas, some of the things that Ed have said, we'd be happy to help you. If you want to collaborate and partner on ideas, even with the academics, we'd be really happy to help you. The only thing you need to do is start. Okay.
Thank you, Lou.
Bravo.
Excellent. I am going to reference back to Lord Johnson and this most noble of callings to apply capital in the most productive way. Now, we might argue whether it's the most noble of callings, but in capital markets, Claire, my question for you is, having touched on the impact of innovators and disruptors in more of the classic parts of our industry, how are the capital markets evolving to support innovation? And what is the role of capital markets in continuing to support that innovation?
So when you look back, if you look back 15 years ago, essentially growing companies had 2 choices for funding. They put themselves up for sale or to someone else who'd got deeper pockets, or they went public. And when you look where we are today, there is a massive continuum now of financing that exists, the vast majority of which now exists in the private markets. So whether it's VC funding, whether it's family offices, whether it's other sovereign wealth funds or other organisations coming into the private space, debt funding, not just equity funding, there is now a massive continuum that is available to people. What that has effectively meant is that private capital is now starting to take the role of the traditional public capital. That does not spell the end of the public markets. As someone who spent 26 years invested in the public markets are still alive and kicking. You've heard some of those messages, and they're going to continue to live on. But what it does mean is that companies are staying private for longer. A couple of statistics. In 2011, the average tenure from inception to IPO for companies was 5.5 years. 10 years later, that was 12.5 years, and it is still growing. In terms of European VC funding, for example, one of the key areas in terms of funding that private capital, It was $7 billion. That's all it was back in 2012. 10 years later, 93 billion and growing. Now, Miles all gave us an instruction. There's been some optimistic Scots, so I'm not going to be a miserable Midlander and say, hang on, but not at the moment. Because actually, when you look at it, and you've said lots and lots of challenges, sure, there's been a 60% retraction in terms of the availability of funding for growth companies, but that is temporary. It is temporary. Now, as you say, we've got to make sure that we bring all of that and as much as possible into the UK so that we don't just let all of that capability and knowledge and excitement go global, because clearly there's lots of competition in terms of this, but there's massive opportunities in terms of funding growth. I mean, one of the other innovations, I heard Aina talk about some of the changes that are happening in terms of the London Stock Exchange, for example. The recognition that private markets are now an important part of the ecosystem which fuels the public markets. This is a continuum. There are discussions going on to create the first ever global public to private crossover market, an intermittent trading system, which will allow private companies who have lots of shareholders through private sources of funding, and indeed employees, to have the ability to trade those shares publicly or quasi-publicly at certain periods through the year. That's a major change in terms of the markets and innovation. And the financial services industry isn't always the fastest one to innovate, but there is a lot that is actually going on and a massive amount that's changed.
Absolutely. And when it does, it's such an important industry. And that's where we're going to go to with the question for you, Ben. What is the role of our industry in bridging the digital divide? Let's go right to the S of ESG here, which quite often is overshadowed by the E. So where do you see the global opportunities for financial and related professional services to fund or to power innovation to drive social impact?
Thanks, Louise. Allow me first to draw a picture of the digital divide in low and middle income countries. That's my perspective, not working, of course, on a thriving UK economy, but very much with a development perspective at the OECD. Right now, globally, 2.9 billion people are offline. Across the 46 least developed countries, so the countries with the lowest scores on the Human Development Index, just 27% of the population use the internet. Significantly fewer women use the internet globally than men. And if you just look at the low-income countries across Asia, Africa, and Latin America, over the last 10 years, that gender digital divide has caused about $1 trillion of loss in GDP. So it's massive business opportunities. Of course, not only looking at infrastructure investment opportunities, but the digital divide is really made up of what's the rule and regulation situation? What is available local content that's relevant? What's the education system looking like? The offline components of the digital divide are really important. And if we just look at sub-Saharan Africa and low-income countries, of all of those who have access to broadband mobile, only 47% that do have use it. And again, many fewer women, and again, safety and security, relevant local content are really the shortcomings, along with the shortcoming of digital skills. So that draws hopefully a picture of the problem. Now, where are opportunities? I want to mention 3 things, although one of the points has been already kind of elaborated in a really nuanced manner by you, Louise. Let me first say a continuation of investment in financial services in those countries, particularly mobile money systems. We have seen an increase over the last 10 years from about 30% of people in low-income countries having access to financial services to now about 71%. And that's mainly due to FinTech. That's mainly due to mobile money systems. And established banks have played an important and crucial role in big supporters along the lines, Louise, that you just laid out. I don't need to repeat your points, but accessing that knowledge, accessing relevant data sets, but then for FinTech companies to go ahead and innovate has been proven to be really important. Now, if I give you that number, 30 to 70%, it paints a picture of there's still room and need to further scale up, but there's also need to what we call scale deep. We've seen this intractable, often called last mile problem. Last mile depicting the challenge from the Wild West back in the days with the telegraph, right? Coming from the East Coast and opening a whole new means of communication, but arriving at a certain place. And then how do you get the telegram message to the farm that's way beyond in a situation where you relied on horses? So that's the last mile challenge. And we have that in development along many issues, but particularly digital access and digital inclusion. And this problem of scaling deep is a really tricky one for your industry because the business margins are simply not there in most cases. So one way to address this is to scope out opportunities to have investments de-risk. I want to give you an example. The digital divide is one of the many problems that's not a simple one. It has many interconnected phenomena and it's rather complex. Gender equality has majorly to do with the digital divide. Investments in sanitation and in toilets in school will make you help advance against the digital divide. So one example in productively addressing a component of gender equality, access to family planning. And I give you this as an example of how can public sectors de-risk investments and where might you be spotting opportunities. In many low-income countries, there's not really a market for contraceptives. And excuse me for deviating from the digital divide, but those problems are connected. If you work in development, there are silos, but it's useful to break them off. And really hard to establish productive markets for contraceptives. There's, among many other contraceptives methods, quite an innovative self-injectable with a duration of 3 months that doesn't have much traction in EU countries or the UK, a little bit in Eastern Europe, but there's potential big demand in low-income countries. The UK FCDO teamed up with the US and brokered an advanced market commitment, wasn't able to put money on the table due to just restrictions, but got the Gates Foundation involved and essentially ensured Pfizer, who currently holds the IP for the self-injectable, we guarantee you demand for the next 3 years. And for that, we need you to commit to, after your IP initial duration runs out, to open up the market for generics. And that's one way for your industry to kind of spot where are organizations like the FCDO, Swedish CEDA has a really good advanced market system program and shaping program, opportunities to have investments de-risk for a scaling deep perspective. I assume most of you have heard of the Sustainable Development Goals, and one really important aspect is leave no one behind. If we just continue with a market-based trajectory of investments, we might be able to further scale up successes, but we won't be able to scale deep and do justice to this paradigm of the Sustainable Development Goals, which says leave no one behind. And to me, that's a really important lens on addressing the digital divide. So that was the first point. Continue investment in financial services. The second point I already touched upon, think of adjacent areas that are really important. Digital divide is made up, of course, of access to energy. We talked about the metaverse, right? Super important, and those conversations happen in the capital. And I talked to technologists and innovators in capitals, from Agra to Dhaka to Ouagadougou, back to Dhaka in Bangladesh. And then going to rural areas or just low-income housing areas of those capitals, and you have an entirely different world. So your conversations play a role. That has impact in low-income countries, absolutely. But then you have many regions where electricity is simply not there or just there for several hours. Investment in microgrids. Look at M-Kopa in Kenya, massive success. Safaricom and Samsung invested over 1 million units sold for solar pay-as-you-go systems with high profitability, made a huge difference for 4 million people in a relatively short amount of time. So microgrids as a really important, locally led, renewable approach. And to just close, get engaged in regulation. Louise, you laid this out with a lot of nuance here for the UK. What I've seen is your industry representatives really sitting down with government representatives, with FinTech players, and actually designing together anticipatory regulation, designing together sandboxes. This has helped FinTech companies in countries such as Bangladesh to really make breakthroughs. And just to point out the last problem, it's not only about the regulation. When we look at the last 10 years, about 70% of all the data protection regulation that has been put in place has been in low and middle income countries. The problem is implementation. That's not necessarily the responsibility of your industry, but an important aspect to bear in mind for the sake of and the ease of doing business, of course, in those countries.
Thank you, Ben. And whilst it might not be direct responsibility for our industry, it's part of the ecosystem, it's the adjacencies, and it's where we have influence as this most powerful industry that we really need to use that influence for the greater good. And I love the fact that you picked up that the microgrids were highly profitable. I think there is a real danger when we talk about the social impacts and making a difference for good, that we think it's more of a charity effort rather than purpose and profit can go side by side, hand in hand, and it's looking for opportunities to do that. I'm conscious of where the time has got us, and I've got a ton more questions for these very, very interesting panellists, but I did want to give the floor the chance to ask some questions, to probe into some of the perspectives that my panellists have had. So we have a question straight there. I think there is a wandering mic if you want to wait for that.
Thank you very much. Wang Hao from Medibank in Singapore. I want to understand, as you mentioned about the funding specifically, how that actually could drive and actually incentivize the innovations here, comparing to the US models versus UK, and also private and public, the continuum of capital markets actually help to boost the innovations. But other than that, is there anything that's just from a government regulation perspective, or just from a kind of, how do you call it, the basic tech structures, etc., to incentivize those, I would say, innovations? Because I do really see a lot of innovations carry on projects in Asia Pacific, particularly Southeast Asia, but funding is actually very, very challenging on this part. So how would you kind of like connect those, if there's anything that's you ever can share your thoughts on?
Claire, do you want to pick up from the whole capital markets piece, and maybe then, Ed, you want to add on that?
Yeah, I think this is an area that is still clearly developing. You know, we've heard a lot talked about in terms of risk and risk appetite. The reality is a lot of markets still don't have the experience in terms of being able to really judge the risks involved in terms of early stage funding. The US market is probably the only one that has that heritage. The rest is still developing. But because there is this broadening out now in terms of the different capital providers, and because there is greater fragmentation, particularly at early stage funding, it's rarely one investor that is taking the risk on being able to support. That risk is being shared, and there's a lot of comfort that is taken from that sort of club approach in terms of financing, rather than just one person risking it all. So I'd say, I think we're seeing a massive sort of potential in terms of growth for funding going forward, but it is taking time for people to get comfortable, because all of this is new to them. They don't have the history to fall back on and say, okay, this is how you win, this is how you lose. There's a recognition that actually you're taking risks. And a lot of investors, and it starts really with the VC community because of the portfolio effect, in terms of they know that they're taking risks, and they know that actually if they invest broadly enough of those will be successful, that actually it will counterbalance those that aren't. And so, and slowly that will move forward in terms of more people getting comfortable with it. So it is a gradual process. This isn't going to change overnight. There is more and more liquidity coming into this system. You heard Wei talking earlier about emerging equities being, you know, what she is focused on. I read the global Bank of America produce a global fund manager survey they have for the last couple of decades every month. The two things that global fund managers want to invest in at the moment: emerging market equities and technology, right? And that's the public markets. The private markets even more so. But they are still learning in this space. So that is the area where, you know, it is going to take time in order to get that momentum.
Ed, do you want to pick up?
Linked to that, I mean, there's a real role for policymakers to obviously send signals either for or against innovation. You know, you can start with the basic premise that, you know, everything is permitted except that which is prohibited, right? But there are governments that lean into, and then there are governments that lean against types of innovation, and that definitely affects the incentives for VC funds and others. But where governments see a meaningful need, such as those that Ben spoke about in, you know, emerging markets, for, you know, means of technology to reach communities and enable them in a way that, you know, government systems can't, for example, then that can also incentivize. We just launched on the 11th of April our P2M product in Brazil. P2M is basically enabling people to use WhatsApp to pay merchants through Messenger. Now, that, you know, that is not merely us doing it all, including the back end. We partnered with, you know, Visa and MasterCard. We partnered with 5 banks. We partnered with 30 different merchant acquirers. because there is an entire ecosystem of connectivity there which gets you to the last mile, right? Because if you don't have all of those constituent parts, you're never going to be able to leverage technology in a scalable way. And the P2M levers off the back of P2P, which is, person-to-person remittances, right? Which is an incredibly important means of including people through phones and payments technology, leveraging messaging technology as a means of including people within the wider ecosystem. So governments have a big role to play. Some of them are not as aware of the negative effects of some of the rhetoric that you can see, or the uncertainty that's generated, as we see in the moment in the US, around the crypto markets, for example.
Can I just add 2 points? Because there are things you can do today. So the government announced just this week, the regulator, the permanent sandbox which you can access. So if you want to access those things, you can. Secondly, Andrew Griffiths also launched the Open Finance, Open Banking Coalition, which you can get involved in today. So there are things that you can do to start to move forward in this today. Because Guy's absolutely right. This is going to take time, but there are steps that you can take. Okay, it's not perfect. We can all say from a government or regulatory perspective, but it's a start and it means we can move. But those things were announced just this week, along with some of the stuff from the Bank of England around digital assets. And if you want to access that stuff, it's all on the Innovate Finance website. We're a non-for-profit, we're a trades body, so I'm not plugging something here. I'm trying to drive more competition into the market.
But you know yourself, I mean, from Singapore, I was fortunate to live in Singapore for 6 years, so I saw it for myself. One of the most advanced digital economies in the world. And why? Because governments leaned into it. It was a government strategic objective in order to achieve that, and the funding, the sovereign wealth fund sitting in Singapore very much sort of, supporting that development, all came together to create that ecosystem.
And they emulated our regulation that was designed in the UK. So, yeah, that is us on export. Another question from the floor. Do we have another one? While we're waiting for a question, I have one online from Kerry Martin. To truly harness and champion global innovation, the industry needs to ensure it's attracting a talented and vibrant workforce. What do you think the industry needs to do to achieve this? Ben, maybe I'll start with you.
I think it's important to think through what do we mean with global innovation. We are currently carrying out research because we want to find out which of particularly the innovation supported by official development assistance, so government spending for development cooperation, has had success, has scaled. And we're often looking at time horizons of 10 plus years, right? And we see, of course, massive success in terms of scale up of private sector solutions, significant parts of economies in the global south de facto run on Facebook, if you think of the purchases made. And what we see is that often development cooperation probably is not the best driver for innovations on that level, but should particularly look at the industrial policy and innovation policy level and think about inclusive growth. In fact, we've seen in economies like Nairobi that for early stage ventures, there's a massive bias. Louise, you hinted at this too. We've seen that predominantly white-led ventures are being invested in by international investors. And local innovators are not supported and are often then relying on the somewhat easier accessible grant funds, which can lead to mission drift. What started out as a social venture with a really sustainable business model degenerates to an NGO that's reliant on grant funding. So I think what you can do is kind of following the evidence base to see are innovations that are led by local innovators more effective, and with that also more profitable, and make deliberate choices in who you support and who you help connect. We've seen the massive influence of boomerang entrepreneurs, individuals who've made it in the global north and came back to their economies. But I think it's really important moving forward to think through what dependencies and power imbalances have we created by having had so much success of global north companies, including Meta, in the global south on many levels. And what are the different industries, mine, official development assistance, yours, are perpetuating in terms of power imbalances that essentially reflect sexist and racist biases in investment, and what can we do proactively to address them, not only from a goodwill perspective, but with a perspective of what leads to better solutions that actually scale.
And Lou, from your membership in Innovate Finance, what are they doing to attract this vibrant talent that is required to continue innovation?
We had 51 countries represented at Innovate Finance Conference Monday and Tuesday. And the feedback that we got was the mix of feedback and thinking. My question to you is, if you don't mirror the customers you serve, how can you deliver solutions they need on a constant basis? So I'm sorry, I am actually tired of talking about diversity. I'm tired of the tick boxes. I'm tired of looking at people I can't see myself in, because you're leaving people out of the room. We only have to look at facial recognition, a technology from 2016, and if you've not seen the YouTube video, The Coded Gaze, you should, because we had ethnic and black engineers coding in white masks, because we left people out of the room. So the technologies that Ed talks about and the stuff that Ben talks about and how we start to drive into capital and move forward quickly from a UK economy perspective, we have to bring everybody into the room. To do that, you need everybody in your organisation to mirror the people that you serve. So my ask is, as you start to do these technologies, is who are you leaving out of the room and how do you ensure those voices are heard? And it's really important now as technology accelerates, as technologies converge, and how we start to address underrepresented groups. These are not just good things to do, they are the right things to do, of course. But if you've heard from Ben and Louise and the panel here, from a commercial perspective, it actually just drives growth. It means the pie's still there, but it's all shared a bit more equitable. And that's got to be good, right? So for me, it's about go back and just have a look at diversity in its broadest sense, socio-economic diversity, neurodiversity, gender diversity, and have a look at, are you bringing everybody into the room? Because then you'll design solutions that meet those needs, but you'll also go quicker.
Thank you. We are definitely out of time now, and I want to thank my panellists. Our question for this panel was, how does the industry better support global innovation? What I've heard, and what hopefully you've heard, is there is a ton of stuff happening. So maybe the real ask is, can you find out a little bit more? How does it affect your organisations? And then, how do you amplify it? So thank you all very much.
I'd just like to thank Louise and the rest of the panel. I think everyone will agree that was absolutely inspirational, and it's given us a lot to think about. And as a panel to wrap up, I thought that was a great way to do that.